All right, future analysts, listen up. We're not doing a boring history lesson today. No, we're tearing apart the ultimate stress test for any investor, the 1929 crash. Think of this as your final exam review.
So let's put you in the hot seat. This is way more than just a history lesson, right? This is the final exam. We're testing psychology, we're testing strategy, and frankly, we're testing your nerve.
Just try to picture it. The news breaks. The ticker tapes are just spitting out chaos. Numbers that seem impossible. And panic? It's not just a feeling in your gut anymore. It's a virus, spreading like wildfire across the entire trading floor. And just when you think it can't get any worse, bam, the next shockwave hits. We're talking about the very foundation of everything, the banks. The places you trusted with every penny. They're starting to crack, one by one, slamming their doors shut.
For literally millions of people, this was it. Game over. Everything they had, just gone. But, and this is the crucial part, while all that ruin was happening, a very small group of people saw something totally different. They didn't see an end. They saw a beginning. The opportunity of a lifetime.
Okay, here's our game plan. First, we'll set the stage for the test. Then, we'll break down the anatomy of the panic. We'll look at the contrarian, the survivor, and the predator. And finally, we'll build your modern-day playbook. Let's get into it.
First up, the test. You gotta understand, this wasn't just some random market crash. Nope. It was a filter. A brutal one that in one fell swoop separated the gamblers from the true, disciplined investors. And this timeline, man, it tells you everything you need to know about the psychology. You had a whole decade of this roaring 20s party, right? Just pure, blind optimism. And then it all slammed head-on into a single day of absolute terror. The drop wasn't a slope, it was a cliff. So, the big question is, how did it all fall apart so fast? Why did almost everyone fail this test? Let's get under the hood and dissect the anatomy of this panic. Okay, here's the gas on the fire, leverage, buying on margin. See, people weren't just playing with their own money. They were using borrowed cash to chase bigger returns. So what happens when prices dip even a little? Margin calls. The brokers want their money back now. This forces everyone to sell, which pushes prices down even further, which triggers more margin calls. You see? It's a death spiral. And this is the perfect way to see it. It's like a line of dominoes. It all starts with irrational speculation, believing things will go up forever. Then, whack, the margin calls hit. That leads to pure panic selling, which then topples the banks. It wasn't one thing. It was a catastrophic chain reaction. All right, now for the fun part. Let's look at who actually passed the test. First up, case study 1, the contrarian. This is the person who won by doing the exact opposite of what everyone else was doing. It really boils down to this, a total psychological flip. The masses were running on pure emotion, FOMO, fear of missing out, on the way up, and sheer panic on the way down. But the contrarian, they were skeptical. They had a plan. They were using their head, not their gut. So what did they do? They sold when everyone else was buying like crazy. They quietly moved to cash and just waited. And as the market value of everything nosedived, their pile of cash didn't just sit there. Its buying power went through the roof. Suddenly they were king. Okay, on to case study number 2, the survivor. Now, this is a totally different approach. It's not about being aggressive or timing the market perfectly. This strategy is all about the incredible and seriously underrated power of just holding on. Look, this person probably didn't have some genius plan. Maybe they just couldn't afford to sell, or maybe they were just too stubborn to give up. But it doesn't matter why. Their winning move was simple. They refused to sell and lock in that loss. And check out the results. It took decades, yeah, but by holding on to good companies, and this is key, reinvesting those dividends, that tiny, beaten-up portfolio eventually became a massive fortune. It's proof that in the long run, patience crushes panic. Every single time. All right, now for the one you've been waiting for. Case study 3, the predator. This is the trader who didn't just survive. This is the person who looked at the crash and saw a way to make an absolute killing. We're talking about guys like the legendary Jesse Livermore. He saw what was happening. He looked right past all the parties and the hype and saw the ugly truth. Soaring debt and just crazy speculation. He saw the warning signs everyone else was pretending weren't there. And this was his playbook.
4 steps. First, he identified the irrationality. Second, he started building short positions, betting the market would go down. Third, he kept a huge pile of cash ready. And fourth, when everything hit rock bottom, he deployed all that capital and bought everything on the cheap. An absolute masterclass.
Okay, so let's bring it all together. What does this mean for you today? It's time to pull out the final exam answers and build your modern-day playbook. So here are the big takeaways, the stuff you really need to remember. The crash was a filter. Chaos creates opportunity, but only if you're prepared. Psychology is everything. Fear and greed will always run the show. And there are 3 winning models: buy low, hold long, or short the bubble. The names and the tech change, but trust me, human nature doesn't.
And that brings us to the ultimate mindset shift. This is what separates the amateurs from the pros. When everyone is screaming about recession or inflation or the next big crash, are you just trying to survive, or are you getting ready to thrive?
So here it is, your final exam question. In the next 1929-style crash, would you be a buyer or would you be a seller? Based on everything we've talked about, your answer to that one question, well, it defines your entire philosophy as an investor. Really think about that.